I work with Chris. I've had the pleasure of knowing Chris since 2005 and working with him for the past 6 years. A great honor to do so, and we can't be more excited than we are now about the opportunities that we think are presented by the markets and the type of pattern analysis and work that we do. So we're excited to be here. We're also appreciative of Investor Inspiration, Renee, Reed, and all the folks there for bringing us on to present to you all. So I'm going to get started here and do a little introduction, and then we'll get it over to Chris. Too many investment resources, opinions out there. I think you might agree with that. There's an endless supply, and it keeps coming. Creates a lot of noise, and our goal is to try to get rid of that noise. But if we're paying attention to the resources and news out there, it gets harder and harder. So more information, improve results or reduce results? I know you know the answer to that question, but it's nice to know when you get some smart folks like Jim Montier, Little Book of Behavioral Investing. He has on page, should be here, page 58 on the accuracy of investment forecasting. It's an interesting stat. If you were really good, he said, if you were really good at forecasting, you could achieve about a 70% accuracy rate. But if you had 4 forecasts and you required all 4 forecasts to agree, your accuracy rate goes down to about 24%. So in that case, more does not look like it's better. That also goes for indicators. You know, if you use charts, you do charting, and you had multiple indicators, I think he would say the exact same thing applies. So with that in mind, we think that the wisdom for investing is simplicity. Keep it as simple as you can. Leonardo da Vinci happened to say that. Occam's razor, William of Ockham, as most of you know, said that with all things being equal, simplest explanation tends to be the right one, and we agree. And that really drives everything that we do and everything Chris has been doing for the past 30 plus years in the business. So our approach to research, maximum simplicity, 3 major steps I'm going to walk you through very quickly in terms of how we approach our research. To sum it up, what I'm about to share with you, you may have, if you've followed us for any time, you'll hear the term power of the pattern. That sums up everything that we believe, everything that we strive to do is focused on the power of the pattern in charts. So step 1 of 3, we look for extremes in price to buy. In this case, buying on support in a long-term chart pattern that you see on the screen. Keeping everything generic here just for the conceptual presentation here, but extremes in price, number 1 thing we're looking for here when we're looking to buy. And that also means, of course, when we're looking to short. Number 2, identify high probability actionable patterns. In this case, here's Harris Corp HRS, a nice bullish ascending triangle pattern. But you see how simple it is. A clear, clean chart, nothing on it, no indicators, and a very simple pattern that tells us what to do, a high probability pattern, which we're always looking for you, so that we can provide maximum opportunity to make profit. So that's step 2 in our process. Step 3, we're going to draw a line in the sand every time to manage risk, guys. Whatever we do, we're going to place a stop. That doesn't mean your stop is our stop, but if we buy, for example, right here on support, our stop's going to be right below it. It's going to be tight. It's typically less than 5% in terms of stop loss. So there's our 3 steps, but I don't want to neglect to say that we certainly will be moving stops up as things move in our direction, and we are not afraid to take some pocket change along the way. So in this case, at overhead resistance, going back a couple of years, year and a half, we're certainly not afraid to take some pocket change up at resistance and or move our stops up at the same time. So that's about us. More importantly, what about you? What are we striving to deliver to you as our customer, as our client? We certainly want to save you time, and our approach, we believe, saves you a a lot of time when you can reduce all of it down to a pattern. And we believe that patterns really tell you what to do, because they're nothing more than millions of people who are telling us exactly what they believe about an investment at any given time. So saving you time is #1 goal for us in terms of the chart pattern analysis we provide. But also, we are another set of eyes for you. If you're great at doing charting already, maybe we're just another set of eyes to identify opportunities that maybe are not on your radar. We also can confirm or challenge your research. Certainly something that if you compare what we do with what you do, does it help you make a better decision? Hopefully what we're doing is going to give you additional confidence to pull the trigger. I hear a lot of guys, I talk to people every day, and one of the challenges that they have is they're not really 100% confident in their own research. And they look to us to help compare what we're doing and they're doing, just to give them a little bit of an edge, a little bit more confidence to pull the trigger. And of course, big time, #1 goal also is accurate patterns for timely entry and exits. If we're doing a good job there, then usually everything else takes care of itself. Objectivity. If you're looking for objectivity, you're not going to find a better place than the work that we do here, because we have 0 opinions, 0 feelings in our research. It's all about the patterns. That's my part to start off, and then I'll come back and wrap things up, folks. But I'm going to bring on Chris Kimble now. Renee's going to switch it over to Chris, and he's going to share some of the things in the topics that we were going to present today around patterns and sentiment. Chris?
Renee, can you hear me?
Yep, I can hear you.
Okay, thank you. Just wanted to check on that. Well, good morning, everyone. For you people on the West Coast, it's really probably a real early good morning. Hey, thank you, Renee, for allowing us to be here. We're very much touched, honored, and humbled whenever we get this opportunity. Thank you, everyone, for listening in. I'm humbled to have a chance just to share a few of my thoughts from my life, and hopefully some ideas that can be of help. One of the things I wanted to share was I got into this business in 1980. This is my 37th year, and talking about being lucky and blessed. As a financial planner, I started putting a lot of money with the Templeton funds and got to get to know a really special guy, arguably one of the best investment managers of all time. And I just wanted to share a couple of thoughts from Sir John today. Most of you, if you know him, he did pass away several years ago, but I really believe his spirit keeps living on, with us. And one of the famous quotes that he says is, bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. And it's probably hard to believe for any of you younger people on the call, but when I got into the business, the Dow was at a whopping 800. Yes, I said 800. The Dow hit 1,000 in the mid 60s. In the early 80s, it was still 1,000. But Sir John went on a great show called Wall Street Week and said, I don't think we'll ever see these low numbers again because the amount of pessimism that had built up. So this is a really valuable mindset, I think, to keep. Also, he said, if we become increasingly humble about how little we know, we may be more eager to search. In your mind or on a piece of paper, I'd like you to draw a circle, and let's just say that represents all knowledge on the planet, and put a dot in the middle of that, draw a line to the outside. If we're really honest with ourselves and humble, we really don't know a lot. We're on this little thing flying through the sky. We find out there's 500 more Milky Ways out there. There's just a lot of fun knowledge to come in the future, and I think it's really exciting. Sir John would say, that the 4 most dangerous words in investing are, it's different this time. And boy, has that been true many times in my past 37 years. He also said, please invest at a point of maximum pessimism. He'd say when there's some blood in the streets, and especially if some of it's your own. I was fortunate to find out that one of the most the predecessor of Sir John, he said in the crash of 1987 was the day that he saw Sir John the most excited in his life. He said he was running around on the trading floor like a chicken with his head cut off. And one of the things that Sir John did to try to protect himself from his own biases is he already had buy orders with different brokerage firms of assets at certain prices that he said, hey, if these things are reached, I want you to buy them, no phone calls from me. And it was his own way to protect himself from himself. Because if that event got on, he found that it might be kind of hard to take some action. And so that's something to consider about certain buy orders out there. To maybe we ought to do this for ourselves. It sure worked for one of the first billionaires in our country, that he became worth a lot solely off of investing. And then to finish, some quotes from Sir John. If you want to have a better performance in the crowd, you must do things differently from the crowd. And, one time he said, Chris, outside of the Bible, the book I learned the most from, or that was the most valuable to me in my investing career, he shared this in the early to mid 90s, with me, was the book called The Extraordinary Popular Delusions and the Madness of Crowds. And I promised Sir John that I would continue to advocate this book, because it's not about whether with any of you it's the most valuable book. Let me just put it this way. It's a darn good read. It's not an easy read if you can get the original copy, but it's a valuable read that once it's in you, I believe you will become a better investor. So from Sir John, from me, I encourage you to get this book. It's easily available on some small company called Amazon in today's world. So trying to move on a little bit about what I'm not. I'm not a bull or a bear. I believe that having a bias, you could get yourself, in trouble. I used to, say to Sir John, that, hey, I'm concerned about this or that. And he said, Chris, oftentimes when it comes to a price perspective, all known knowledge to every man and woman on the planet is built into price that given day. And so don't be so concerned about what you know at that time. Be concerned about what you don't know, and that's not built into price. And humbly, that's pretty easy to say, but I bet that I don't even know 1% of what Sir John forgot. So it was a great saying for him to say, but it was kind of hard for me to follow up. And so those were things that led me into trying to develop the power of a pattern. If all of us have three things in common, oftentimes they say we all have two things in common: death and taxes. I'd like to say, let's just add a third. We're all judged from ourselves in the mirror, from our employer, from the value of our 401k, our pension, our trading account, or whatever, by where we buy and where we sell. So it's the entry and exit points that we're all judged by. That's the scorecard. Whether you're a professional money manager or just an individual trying to grow your family assets and make life better for you, we're judged by that. So hey, we want to try to be that person that helps you with price. That's all we're trying to do. And we're bullish on opportunities. We believe that the opportunities, regardless of things you see in the news, are just as great or greater today than they've always ever been. If we own an inverse fund, say to the NASDAQ 100, a lot of people say, well, Chris is bearish. Actually, in my opinion, we're just bullish on that inverse fund, because we're trying to buy it at the lower left of a chart and hopefully and praying and hope we're blessed that it moves to the upper right. So that's all we're trying to do. We're not trying to say we think the market will be here or make decisions based upon the PE ratios too high or too low. Just none of that stuff. We're a price shop, and we want to help you with entry and exit points. So what I target is I look for chart patterns that have a high probability for reversals and breakouts. I coined the idea of TBNM several years ago. After Sir John shared with me in the late 90s, he said, Chris, I got a little bit of evidence or just a gut feeling that the market could be challenged to make any net progress for the next 15 years. I got into business in 1980, and boy, I had buy and hold for a long time, and I humbly did not like him saying that. Not only did he scare me, he frustrated me, he challenged me of what the heck do I do? And so that's where I started coming up with the idea of TBNM, which stands for tops, bottoms, and no middles, for a while. And I still love moving averages. I think they're a fantastic tool if you use them. Internet high five right now. They're not broke, but as I used them, I found that there was some challenges with them, as all good strategies have challenges. Buy and hold, what's its challenge? Well, one of them's a large decline. One of the challenges of a moving average, what is it? You got to let the top and the bottom go by. And so what if you could be more helpful, or you could just skim off a little bit more at these key turning points? So we want to try to help you with those tops and bottoms if it's possible. I know the market's been going up for years and it'll probably never go down, but someday maybe a top could be important in this marketplace. So today, you know, how to use extremes and chart patterns and sentiments to your advantage is something that we're going to talk a lot about, excuse me. We're going to discuss, or what I'm going to share in just the next few slides, is what's a crowded trade and why is it important to investment decisions? How you can use extremes and chart patterns plus extremes and sentiment to increase your probabilities of success. And sometimes how investors are positioned in an asset can serve as evidence to do the opposite. Remember, Sir John, he said, if you do what everybody else does, you'll get what everybody else gets. You know, to me, one of the most fascinating stories with him is in the mid-60s, he had his Templeton Growth Fund. And can you imagine a growth fund manager today doing this? He took 65% of his assets and put it in one single country. He just loaded up, and that country was called Japan. And then all of a sudden, he held on to it. It went up like 30-fold, and in the late 80s, he exited there. That's when everybody was piling in, and he did the opposite in both times. So we want to share some ways that maybe that type of an idea could help you. We want to discuss how to capitalize on assets that currently have extremes and sentiment, and also our top patterns to take advantage of now that we hope could be intriguing to you and also opportunistic. So our favorite setups we're going to discuss today is how to take advantage of smart and dumb money at extremes. You know, when we see either side of the emotional spectrum, what do you look for in possible reversal points when sentiment is at extremes? One of the things that I think of all of the positions that we've taken this year, gosh, Rick could hold me my feet to the fire on this, but I bet 80% of them were bullish ascending triangles, and we'll discuss why. But just real briefly, you know, these are the best patterns in a bull market, in an uptrend, and that's been what's taking place, and that's what's been most beneficial to our clients to use. And then also we'll finish with some assets that are testing long-term support and resistance. Kind of just share some highlights of what we're seeing. So one of the things that, you know, I don't know about any of you on this call, but, you know, I'll admit I have my biases, and it's hard to stay away from them. You know, we're in an information, as Rick started out this presentation, there's no shortage of accessibility to information. Humbly, in the early 80s, to get the Dow Jones quote retrieval service, I couldn't afford it, but it was $500 a month in the early 80s just to get current quotes on the stock market. And I finally got a cable feed into my office, and headline news at 10 minutes after the hour, and 10 minutes before the hour and 20 minutes after the hour, they'd give an update on the Dow. And that was my really simple way to know what the market was doing at that time. And boy, I imagine to all of you, that's kind of laughable compared with today, because you can, you know, just go into a Buffalo Wild Wings or a sports bar, and there's a good odds you're going to see some Quotron or a channel up there showing stock quotes. So one of my ways that this is an exercise I do for myself, everyone. This isn't some exercise to try to trick you or anything else, but to try to remove our biases, is I have a way that I can look at chart patterns without knowing what the asset is. And so then my first focus is on price. Where might I buy? Where might I sell? Where might I walk away from a negative perspective? And where might I harvest some of our gains in case things are going correctly? So we'll discuss each of these charts here, but in the upper left, this asset, whatever it happens to be, is testing a 37-year rising support line. Whatever this asset is, it's in an uptrend. Whatever this asset is, it's got hit hard lately. And understandably, that would be kind of concerning to most, me too. There's got to be some reason, especially when the market's heading up. Whatever the asset in the upper right is, it happens to be testing a 9-year rising support line. And at least this asset's been chopping sideways for many months. Maybe it's building a base. And I would imagine most of you'd say, well, the chart in the upper left and right, I know what I might do if that puppy breaks those support lines. And that's where we want to try to help you. I'd obviously have a stop there. And if you're open-minded to it, maybe the opportunity to make even more money is if that support breaks. That would be the high probability trade. In the lower left, whatever this asset is, it's trending higher. And it's been making a series of lower highs, flat tops. There's your bullish ascending triangle. So bullish ascending triangles are continuation patterns. So if the strength in the trend continues, You know, it's probably most likely above key moving averages. But where do you really enter and exit? And to me, it's about price entry and exit, not whether it's above or below a moving average. In the lower right, whatever this asset is, it's not had a good couple of years. And we'll find out later on that that asset's down about 50%. But maybe a base was built. Maybe a breakout is taking place. And you'll see that we're long that position, and we happen to own all of these. So we'll discuss these coming up. But I want to share that if you go to our blog, kimblechartingsolutions.com, you'll find our blog there. And one thing that's different is how we spell Kimble. I wasn't lucky enough to be part of the family. A lot of you might have heard of Kimble organs, Kimball, but that's not us. So if you happen to struggle to find our website, it's Kimble. So let's move on to some extremes that are taking place. And so this would be a starting point. This is, I want to say this in a really positive thing and encourage it. For any of you that are looking for sentiment, these type of data, it's easily accessible at sentimenttrader.com. I've been getting data from them for years, and I owe them a lot. And I say that because this data has been really, really helpful to me. To me, it's priceless and it's not expensive. So I want to say, you know, one time Sir John, he always kind of would challenge me. He said, "Hey, Chris, do you know who the low-cost attorney is?" And I kind of, no, not exactly. And he said, "Well, it's the one that gets you off." So it's not the cost of Sentiment Trader. It's not the price that you pay to get Kimble research. It's the productivity and the value that comes out of things. And so in my opinion, to me, Sentiment Trader is free because of the value that they provide. So this is a chart on cocoa positions. And what I just want to share is there's an extreme going on. I'm going to share about 5 different sentiment charts from Sentiment Trader, and each of them, I know that these are kind of small, but they go back about a decade, and the point would be is there's a crowded trade, the most crowded trade in the last 10 years taking place in cocoa. And so historically, over the last 10 years, when this crowded trade has taken place in this fashion, cocoa has been closer to a low than a high. So now comes the power of the pattern that we want to look into it. So here's a chart on cocoa. So we see that, and this is the cocoa ETF NIB on a weekly basis going back almost, let's see, 8 years. This is since 2009. So you'll notice the blue falling line. Cocoa's keeps creating a series of lower lows over the last 8 years. But there's a potential base taking place down here. And so as we saw the sentiment extreme, which made me think, well, the smart money's betting it's going to go higher. The dumb money has a bet in place that it's going to go a lot lower. So if things start to churn or turn the other way, a lot of people have to cover their short positions. So this could be a bullish opportunity. So the power of the pattern, we took a long position recently on a breakout at 1. It's treated us really well. We haven't owned it too long, but I think in the first 7 days, we made half as much in 7 days as the S&P 500's made this year. So just the sharp rally now has, in my opinion, cocoa testing or NIB testing a key resistance level. And that resistance level would be what? The highs of earlier this year and a series of lows for a couple of years. And so we're long, but when we see this, we actually bring up our stops. But this would be very encouraging that if NIB would break out, there's a good chance it could attract even more buyers. And the sentiment is starting to roll over up here. So there's some unwinding from the dumb money. They're covering their shorts, and the smart money's making some money, but you still don't see these huge extremes. So this is good to see being long. And this is a key test down here of resistance that if it would break out, I wouldn't be surprised to see it attract more buyers. And there's a few unfilled gaps up here that could attract some more upward pressure to this asset. So these are the type of things we're looking for. It's not about the chicken or the egg, but we like the combination of looking for sentiment extremes and price patterns that we like. So staying along the same thing, sugar. Sugar is typically when traders own the positions like they do now, Sugar historically over the last 10 years has been closer to a low than a high. And so here's the look of sugar. And this is the sugar ETF SGG. And obviously, I don't want to discourage, or I want to make light of that. Obviously, all of these same things can be done inside the futures markets. So we present these ETF, also alternatives, as positive things that people can play even inside IRAs and 401ks. So downtrends in place. There's a narrowing pennant pattern that both bulls and bears are being frustrated. So we picked this up just recently because of the sentiment extreme that smart money is betting it's going to go higher. Dumb money is betting big time that it's going to fall. And so we've taken a position of long, and you see that sugar is attempting to make a breakout at 2. And again, this is a weekly chart. So another one along these same lines of sentiment extreme is coffee. Coffee, again, smart money is betting it's going to go up, and dumb money is betting it's going to go down. I don't try to spend all kind of time thinking about, oh, what's smart money and what's dumb money. I think it's just, let's simplify things, folks. Let's look at an Occam's razor. Is that just the bottom line is that historically, when traders own this type of position in coffee or any other asset that we've discussed, that asset historically is closer to a low than a high. Now, again, I don't think this helps you on entry and exit points, but it does maybe ring the doorbell. Hey, maybe you ought to go look at me, folks. Somebody's knocking at your door of around 16, not doing too well. I hope that it's not true. I'm going to just keep going, everyone. At this time, coffee is support, but we're waiting for a little bit more positive action to take place before we're buying. So we do have a buy alert, but here's something that we don't own, but I like the setup. Is intriguing to me. So moving on the flip side is an interesting one in the crude oil market. As we all know, crude's done very well of late. Back here, the smart money was betting in 2014 that crude was heading lower. The dumb money was had a position of that they were betting. I believe it was one of the longest positions in all the history. It was going higher. So then crude proceeded to trade from about 110 down to into the 30s. So we're seeing another extreme in sentiment taking place. So here's a long-term look at crude at this time. Excuse me, folks. And I apologize for any coughing. I've had a bad cold the last few days. So if you're old enough to know Lily Tomlin, I most likely sound like I'm talking through my nose. So I'm sorry for that. But I do want to say that when this chart looks at the high in 2014 in crude and the low, and the rally that we've had from the low 20s to the current level of around 55, it's retraced at the Fibonacci 38% retracement level of this whole move. So it's at the top of a trend channel, it's at the 38% retracement level, and we have an extreme in positioning. So if you were long crude, this is not to discourage a long position in crude, but it would say you might want to have your stops a little tighter than normal. But regardless, if crude would break out here, I'd like to be an owner of it, regardless of what you see in the upper left, because it could run for a while. So we're going to leave the sentiment combination, and we're just kind of look at patterns for just a little bit. And I want to share that, earlier, we're now going to get into our bullish ascending triangle patterns. So this was a pattern that we liked, especially the length of time that you see the trend being up on Hawaiian Electric, the symbol's HE. This is on a weekly basis. You see a series of higher lows, got a nice trend, but enough buying pressure hasn't come forward. But this has tested it for 3 or 4 times, and I think it's about a month ago, 5 weeks ago, we said, okay, it's been up here enough times, so we're going to give it a long position, and we'd set our stop just below here. And we've been lucky and blessed. You can see what's happened since we've owned this. And so it's had a really nice gain, again, just in a short period of time. A potential stodgy utility in a month has made about half as much as the S&P's made this whole year. So we hope to find really sweet risk and reward opportunities to present to you on a daily basis. That's our goal. So here's another look, and we're going to now look at a couple of ascending triangle patterns that we do not own, that I'm watching closely, that I have some buy alerts. This is TXRM, which is Texas Roadhouse. You see a quality rising channel, higher, low, higher, low, higher, low, but then it's struggled around the, you just call it the 51 zone for a while. And so it's butting up against that. So we have within the system an alert that if we start to break out to the upside, you can see this being a weekly chart. What, 3 weeks ago we tried, it's a bearish reversal pattern. So buyers disappeared and sellers came in, quickly. But I like this one. It's on our radar screen. And I only like it if it breaks out, but I do like the potential, because the historical stats on an ascending triangle pattern, which has nothing to do with Chris Kimble or Kimble charting, is about 2/3 of the time they break to the upside. So I like those, and they also provide good risk management lines in the sand. And another bonus is you could take measured moves and see where these things could run out of gas. So again, one of our favorite patterns in an upward trend. Another one that we don't own is Main Street Capital, symbols MAIN on a weekly basis. You see another trend that's up. You see since earlier this year, struggling to make much move, but we see a breakout and now a dual test of support. So again, we don't own this position, but these are the type of things that we have on our radar screen that we're trying to reach out and share with our customers, and just what I have automatically running in the background. Another one that we don't own, that a few years ago we did what we call an Eiffel Tower pattern. When we see an asset that's going, vertical to a large degree, I like to just kind of remind people that oftentimes when you see an asset that looks like the left side of an Eiffel Tower, sometimes you can experience the right side of the Eiffel Tower. And what got me is when Sir John walked away. He invested in Japan earlier, we were discussing in the 60s, and he walked away in like 1988, early 88, and that index in Japan continued to go up for a little bit over a year. And there was a journalist from the Wall Street Journal, and he said, aha, the old man's lost his touch. About broke my heart. I've been in love with Sir John for a long time, and they were giving him a hard time, but all of a sudden, now it looks like maybe he was on the right path, because excuse me, he may have did he really walk away a little early? Yeah, he could have milked a little bit more out of the system, but all of a sudden when it went down for the next 20 years, I think he was a little more right than wrong. So we did an Eiffel Tower pattern on 3D systems. I believe that 3D printers and different things and this whole technology, if we get enough time to fog a mirror for a long time, I bet that technology is going to be really important with our lives. But to get ahead of itself, it did for a while. So 3Ds went from what, 100, almost just called $100 a share in 2014 down to $8 recently. So just a meager 92% decline from the peak. But it does intrigue me from a power of the pattern perspective that we're on a potential 10-year rising support line. You see there at 1. In 2016, at this line, you see a bullish reversal pattern. So we're watching really with a close microscope, potentially, again, this is a weekly pattern, that there might be a reversal here. And it's very close to the lows that took place back in 2016. So this is another one that's on our radar screen, and above is that the momentum is deeply oversold. It's getting close to being as oversold as this opportunity, was to buy at a low price. So again, don't own this one, very much on our radar screen. I have buy alerts if we see a little bit of strength to take ownership in this position. So here's just another quiz for everybody. This is an ETF that has something to do most likely with all of our lives. And so this ETF has stayed inside this green rising triangle, this green rising channel, excuse me, since the 2009 lows. Hit the highs earlier this year, got hit really hard. So now it's testing 8-year rising support. There's an unfilled gap here. And as earlier Renee talked about, we talk about emoji points. A lot of us put the little happy face or sad face on some text message or an email. But what does a high or a low represent in any given asset? It was an emotional point for traders. They changed. And so it was an emoji point. And so one thing that we find that really helps is why not try to attach these emotive points or emotional highs and lows and see if it can help you from a charting basis. So this ETF is IYZ, the telecommunications ETF. We're on this webinar because of really cool technology. So it's done poorly in a rising market. Ought to raise a few feathers, give you a little sweaty armpits or sweaty palms. But this is something that we're watching closely. And no, I shouldn't say that. We actually bought it. And so we're long here with a stop. And I think we just did this in the last 24 to 48 hours. So we're long with a tight stop right here. This would be how we try to make these decisions and what type of opportunities. And if this breaks, hey, we're out of here. And if somebody has the propensity to do so, if it breaks this potential cluster of support, what's wrong with shorting it if that's within your risk parameters? So another one that I want you to look at that we do own, this is McKesson, MCK, on a weekly basis. This puppy has done really poorly, in my opinion, with the market moving well, but it is testing 10-year rising support and also testing these flat bottoms here. So this is a good, what we would say is an entry point with a tight stop. I don't know how this will turn out, but if it doesn't go well, we're okay with, there's a difference between nicked and being nicked and an amputation. I'm okay with skinning my knees and nicking it, but I really don't care to lose a body part. So we always try to take these stop loss positions that are fairly tight. Could sometimes a tight stop loss come back to get us that it was too tight? Absolutely. It's happened before, it's happened this year, and it'll happen again. But that's just something that you have to deal with through diversification, that I'm okay with that part, because I'm okay with re-entering a position if something was too tight and we still like the pattern. Another one that we own is utilities. Just in the last week hit all-time highs, but not this utility. It's had some negative news. And is it built into the price? Very well could be. But the bottom line, this puppy's testing a 40-year rising channel with momentum at a degree that it hasn't seen in 40 years. So I like the thoughts of this because you could give me all kinds of research on the negativity and I'd say, high five, you're probably right. So now tell me what's going to happen and what other news is going to come in. I just want to know about the price, and this is an interesting perspective to me, and we own this with a tight stop loss. Another one that's been in the news has just gotten hammered from one of the blue bloods of all blue bloods in America's General Electric. It just hadn't done well, and you want to buy the dip. None of the news is good. The trend's not good. They came out, cut their dividend this week. Is all of the bad stuff already known and built into the price? Humbly, folks, I don't know. It's above my pay grade. But this does intrigue me that this puppy's sitting on a 40-year support line with momentum at one of the most oversold levels in 4 decades. Keep an eye on this. And then if it breaks that, gosh, I bet this trend continues. So those that with the risk tolerances could consider even shorting this thing if a 40-year support breaks. Another one is biotech. Not had a lot to brag about in the recent future. Long-term trend line is being tested. Potential bullish reversal wick. We do own this with a tight stop here. So I'm going to wrap up 2 charts here, but in closing, I want to share a couple of things that have my attention from a 30,000-foot view. Way off the chart down here, Sir John bought the Nikkei 225 index. He sold it up here, but the bottom line is this was the peak in late 89, 90. Here was the bottom in 2009. And so this big rally since the 2009 lows has this index back at its 50% retracement level. Also, the highs in 1996 took place around the 22,000, almost the 23,000 level. And this is a monthly chart, far from proven, but as we are speaking on the 17th day of the month, so far, that's a pretty good size reversal pattern. So for bulls in Japan, this is really not the kind of pattern you want to see so far taking place this month. And then to leave it with this, the last chart is the S&P 500. Look at that solid trend that's taking place. Continues to have a series of higher lows and higher highs that's taking place. At this time, this movement has taken place inside a rising channel 1, And at this time, the S&P is kissing the top of this. So is that bearish? Heck no. Does it mean that you might want to be aware of this channel? I really think so. Does it mean that if you're trading, you might pull up stops a little bit higher? I'd sure consider it. And to go along with that, this is the advanced decline line of common stock only on the NYSE. You see a similar looking pattern since 2009, a series of higher lows and higher highs, and it's testing the top of that channel. So this is an interesting price point to everyone that I think we ought to be aware of. I hope that you found this of value. I'm going to turn it over to Rick, but again, for those that are on the line, Renee, everyone, I hope you, this will be the first time I'll say it. Happy holidays, everybody. Have a great rest of the year, and thanks for being part of this. Thank you, Renee.
Okay, everybody, we're going to wrap this up, but we did not want to leave you go without providing you a way to engage our research if there's interest and it fits the need for what you're looking for. So this is an offer that allows you basically to engage all of our research and test drive our premium membership. So that's everything that Chris produces, which covers a number of markets and sectors and asset classes, and provides somewhere in the range of 3 to 4 trade opportunities, if you will, position opportunities on a weekly basis. That's really often a function of the market and the patterns that we're looking at. Could be more, could be fewer, but that's an average. Premium research, just to give you an idea of what you would be receiving with this trial period, which we're going to give you 30 days, and we'll talk about that in a second. Everything we produce, as I mentioned, there's the asset classes and markets, broad market sectors, commodities, metals, and individual stocks. There are the areas. That's not everything. It might sound like everything, but it's not. But it's certainly enough to chew on for sure. Chris is looking for opportunities on a daily basis with premium, and that doesn't mean you're going to get an action item every single day, but one of it might be to buy an asset, another one might just be to pull up stops. But you'll get these trade alerts sent to you immediately via email on any opportunities or changes. It includes a chart and any action Chris is taking with an initial stop. And then there's updates to those stops through alerts as well as if we're taking money off the table. All special reports are Connect series webinars that we hold for premium members, which is really a summary of many of the things that patterns that we've been looking at, but also new opportunities, very similar to what Chris shared today. We share every month with premium members. All of our weekly research reports, which are very in-depth reports, and I'll highlight them a bit later, but there are 3 major reports that Chris produces. They are also all included as part of your premium membership. And also a special indicator that Chris has developed and used over the years. It's been a great indicator for providing advance warning of major market turning points, which we all know we have not seen any major turning points, but this indicator has kept us in from a long-term perspective, and has been very, very accurate and helpful to us all. And then finally, a personal fact sheet. We want to get to know you. This is not about you signing up for research and there's no communication. We want to have communication with you. The more we know about you, the better we can direct you in terms of how to make the most of the research. This is just a partial summary of some of the information we provide, but I just want to give you an example of some of the sectors that we will target and have as and hold as positions over time. And again, I would look at this list as an opportunity list, not a set of positions that you have to own. We own them, and we're suggesting to own them, but you get to pick and choose which patterns you like, which sectors you may want to focus on. It's simply a list of opportunities that we share with you and hope that you can engage in and profit from. From a big picture perspective, Chris is monitoring over 200 ETFs and about 250 stocks, which the 250 stocks is mainly made up of seasonally strong stocks that he looks at on a monthly basis. We're not looking at the universe of 10,000 or whatever stocks. It's a very specific set of stocks with specific criteria he looks for to identify high probability patterns. As you should expect, there are people who've used our research and said some nice things about it, but I just want to give you two quick examples of what they're saying about our research, which really goes in part to what we were saying in the beginning of this whole presentation about simplicity. And this is a good, simple, clear message from Michael, who has used our research and had really focused on the fact that it was simple to understand, clear information, and ultimately made money, which is the bottom line. Does it pay for itself? And Tom had actually uses us to as almost a buffer to other research that he uses, and makes it really about not owning just our research. That's not the path that we're trying to go down here. It's rather, can our research be of value and complement the other research that you have? And Tom's comment, I think, represents that. Other comments from other members on our website, you obviously can't see this, but if you go to our site under the About Us section, you'll see a bunch of other comments. And I would encourage you to read them. It's not just about saying nice things about us, but the specific things that these members are sharing will give you a good indication of whether the research is for you or not. Because I think guys will get pretty detailed in some of their comments, and I think it's of help to you in evaluating if the research is for you. So what we want to close with is offering you to test drive all of our research, premium member research, 30 days. I think in a short period of time, you're going to know if this research is for you. Ultimately, does it pay for itself? That takes more time, but at least the research in a short period of time, you'll get exposure to everything we offer. But most importantly, during and after the 30 days, you have complete flexibility. Switch anytime to other research that we have or cancel anytime. If you remain with premium, it's $397 a month after that to get that research. If you decide that premium is not right fit for you, whether it's more information than you needed or it's maybe the budget's not there for it, our 3 weekly research reports might be an alternative. These are the 3 reports Chris produces every week, provides actionable alerts along with them. Cost of about a cup of good coffee a day. That's one option if premium's not a fit. If weekly combo is perhaps more than you need, you can take on any one of these individual weekly reports at $67 a month, which is a black cup of coffee per day in terms of the investment. Any one of these 3 reports you can buy individually is the point. I would encourage all of you, if you haven't already done this, sign up for our free daily blog alerts on our website. Under the sections called blog, just put your name and your email in. You'll get almost daily, Chris produces a chart and pattern analysis, not specific action to take, but at least a way for you to follow us if you're not familiar with us. And as long as you wish to get familiar with the concept of what we do on a daily basis. So to test drive, if you wanted to move forward and take advantage of the 30 days on us, there's a link that Renee is putting in your chat box now. Just take this link. It'll take you right to the last page which applies the coupon, in other words, automatically, so that your first month is free. And from there you can sign up and you'll be ready to go, and I'll get you updated on information over the past week into your inbox today.